Did you know that there is a belief that Tesla's latest alliance will change the game? This might be some good news for Tesla aficionados and investors who are more than eager to hear it. Even though Tesla experienced record lows and a number of obstacles in the previous year, the top electric vehicle manufacturer never gave up on innovation. It would be unwise for you to miss this. Piedmont Lithium reported in a news statement on January 3rd that it had modified its contract with Tesla Inc., Tesla, in order to provide the American automaker with spodumene concentrate SC6 from North American Lithium now. According to the aforementioned press statement, Piedmont and Tesla have also decided to revise their prior offtake agreement to reflect the parameters of a new deal. This new agreement will be binding for a period of 3 years, with the possibility to extend for an additional 3. Piedmont has committed to providing Tesla with about 125,000 metric tons of SC6 starting in H2 2023 and continuing through the end of 2025 as per the revised agreement. The revised terms state that a formula-based process connected to average market prices for lithium hydroxide monohydrate will determine SC6 pricing for the duration of the agreement. Market prices at the time of each shipment will decide the pricing Piedmont receives in accordance with the Tesla agreement. Piedmont Lithium President and CEO Keith Phillips stated, "We are happy to be able to partner with Tesla to supply lithium resources produced in North America. This deal underscores the importance of and expanding demand for the North American lithium supply chain. Since 2020, the landscape of electric vehicles and crucial battery materials has altered substantially. This agreement supports the goals of the Inflation Reduction Act, which includes strengthening the U.S. supply chain, the clean energy economy, and global decarbonization by ensuring that these vital resources from Quebec stay in North America. First commercial shipments are anticipated to start in Q3 2023, while concentrate production is anticipated to resume at NAL in H1 2023. According to Piedmont's offtake agreement with Sayona, Quebec, Piedmont is entitled to buy the greater of 113,000 metric tons annually, or 50% of SC6 production, and Piedmont intends to deliver SC66 to Tesla from now. For the duration of the mine term, Piedmont's purchases of SC6 from Sayona, Quebec, are subject to floor and ceiling pricing. Recall that Piedmont Lithium Limited also declared at the end of September 2020 that it had signed a legally binding contract with Tesla Inc. to supply the latter with spodumene concentrate SC6 from Piedmont's North Carolina mine. According to the agreement, it is for a fixed price 5-year term that begins with the delivery of the first product and can be mutually extended for a second 5-year term. For the first 5 years of the deal, Piedmont will produce 160,000 tons of SC6 annually. The fixed commitment will make up about 1/3 of that amount, plus an additional amount to be delivered at Tesla's discretion. For the first 5 years of the projected integrated mine to hydroxide project, Piedmont anticipates that the sales of SC6 will account for 10 to 20% of its entire revenue. The agreement is subject on Tesla and Piedmont agreeing, in accordance with their respective development timelines, on a start date for delivery of spodumene concentrate that falls between July 2022 and July 2023. It was then decided that Tesla and Piedmont would revise the September agreement by early January 2023. Piedmont's stock increased by 8% to $47.50 in pre-market trading on the announcement of the revised agreement by the firm. Tesla has increased its involvement in the battery cells raw material supply chain in an effort to hasten the shift to electric vehicles. The carmaker has been assuring the supply of minerals such as lithium, nickel, cobalt, and others for its battery cell suppliers for years, even Thaug. It only began producing its own cells last year. In recent times, Tesla has entered into off-take agreements with junior mining firms as well as established mining companies with the aim of expanding the supply of certain essential materials for batteries through new mining operations. These businesses use this tactic to raise capital to develop their mining ventures. Among those mining firms is Piedmont Lithium. The miner and the American automaker have modified their supply arrangement, which is consistent with a trend that has been observed in the last few years. Long-term contracts based on a fixed price negotiated between seller and buyer have historically dominated the lithium market. However, the recent price increase, combined with the volatility of lithium prices in the future, has forced a change in the lithium value chain toward a pricing mechanism based on more current and transparent supply-demand dynamics. In other words, starting in the second half of this year and continuing until the end of 2025, Piedmont Lithium will now provide Tesla with an enhanced volume of 125,000 tons of SC6, a high-purity spodumene concentrate appropriate for lithium-ion batteries. The revised conditions of the agreement state that a formula-based process connected to average market prices for lithium hydroxide monohydrate will determine SC6 pricing over the duration of the agreement. According to Piedmont Lithium, market prices at the time of each shipment will decide the pricing Piedmont receives under the terms of the agreement. With Tesla, Sayona Mining's North American Lithium project in Quebec, Canada, will now provide minerals to Tesla. It was supposed to originate from Piedmont's project in North Carolina, but pre-permitting is still ongoing. Spodumene is a lithium-containing hard rock mineral that is essential to the manufacturing of lithium-ion batteries for electric vehicles. Since 2021, the increase in the price of spodumene has been in line with the rise in the price of downstream lithium chemicals. Due to the strong demand for electric vehicle EV batteries, the lightweight metal has entered a new bullish cycle. This has led to an increase in price for all grades of lithium, including technical grades, battery grades, and feedstock spodumene concentrate. However, it appears that these advances have slowed off recently. Since the beginning of December 2022, Chinese lithium prices have been declining. This is because upstream demand for lithium salts has decreased along with China's EV production slowing down in November of last year. The minimum 6% Li20 spot price CIF China for spodumene, according to market participants, was $8,299 per ton on December 22nd, down 1.67% from 2 weeks earlier, but up $225.98 from $2,400 to $2,600 per ton on January 6th, 2022, according to Fastmarket's fortnightly price assessment. Over the past 10 years, as consumer demand for environmentally friendly vehicles has increased, the market for electric vehicles has experienced significant growth. The number of electric vehicles EVs sold increased from 120,000 in 2011 to 6.6 million in 2021, accounting for 10% of all automotive sales, according to figures from the International Energy Agency (IEA). According to EV volumes, 4.3 million new EVs were sold in the first half of 2022, a 62% increase over 2021. In terms of market capitalization and sales, Tesla is perhaps the largest electric vehicle manufacturer, while the Elon Musk-led corporation brought in $57.14 billion in total revenue during the first 3 quarters of 2022, with $50.17 billion coming from car sales. The media has been claiming that Tesla is no longer the world's leading maker of electric cars because the company encountered many challenges in the previous year that resulted in record low numbers. Some claim that the inclusion of plug-in hybrids is the cause of this, though. Although everyone acknowledges that electric vehicles are the way of the future for the business, Tesla has been making significant investments in the mass production of electric vehicles for a number of years. While the majority of established automakers continued to concentrate on producing cars that met government regulations by building a sufficient number of them, Tesla pursued an aggressive production plan aimed at boosting output at its Fremont, California, and Shanghai factories. The 2 more recent gigafactories, or enormous factories in Austin, Texas, and Berlin, Germany, are anticipated to provide the largest output rise, as they are reportedly still in the ramp-up phase. Not only are deliveries skyrocketing, but Tesla is turning a profit without needing to sell regulatory credits. After only $721 million in 2020, net income increased to over $5.5 billion in 2021. Its profit margin was less than 1/3 due to regulatory credits. The business has maintained its impressive performance in 2022, showcasing record-breaking revenues, operating profit, and free cash flow in the 3rd quarter of the year. Of course, it's also important to remember that Tesla's stock has been declining for the majority of 2022. However, automakers have only recently begun to acknowledge that mass producing all